Hi everyone, hope you're well, hope you have a good weekend. There's a big race today on in the UK, the Grand National. For those of you that do like horse racing there, good luck. And yeah, may it be fruitful Saturday for you on the Grand National. Brilliant race, love it, get so excited when I was a little kid. Once again, thank you for the continued support across the channel here. It's great, the Telegram group, everything you contribute, and obviously your subscription. Thank you for all the nice comments as well, yeah? Really good. I got a fantastic comment yesterday. It was amazing. Absolutely blew me away. Thank you for that. But yeah, diving into this video right now, Harmony 1. You can see what we're targeting here. At the moment, we're not going to shy away from the fact that we are in a bit of a downtrend, okay, because you've got the bearish cross on the 4-hourly time frame here. You're being forced down. You've had the bounce off the bottom here. We're hoping that this is the bottom, because if this is the bottom, then you are going to start marching on, okay, to this full retracement, which we've outlined in the channel here, to that full retracement there. And obviously, you know, given the Fibonacci extension, that is the price prediction. And if you want to check the V-chain videos out, you know, numerous other videos where our targets are actually being met off these consolidation events where they go down and they start to creep back up and they start to march on. Looks drab, looks boring, but they eventually, you know, they do get to these sort of price targets. That's why this Fibonacci extension here is an amazing tool, okay? It's an amazing tool. Because like I said to you, you know, if you've not got it, you're blind. You don't know where you're going. It's like driving in the dark, isn't it? You need headlights, and these are your headlights basically. So always drop them on your charts. Never not play with fibs, okay? You'll discover things that I don't even know, you know, on your Fibonacci retracement tool there. And if you do find some really clever little tricks, make sure you give us a shout and let us know. So basically, you're looking like you've got the full retracement here. You've started to form the bottom. You start to march on. You are running into level of resistance, a golden ratio, which we know about. I said to you, if you get through that, it's golden for the retracement, really. You know, it's pretty solid. But the minute you fell back, and you are, at the minute, unfortunately, you are breaking down, okay, and you are looking like you're coming down even more, which again is not necessarily too bad, okay, because I did say to you that you want to see that W double bottom, okay, where you do sort of come down and test this lower level here as a support again, because V-shaped recoveries, if you get a V-shaped recovery, okay, usually they do this and then they're gone. Right, they're gone, and because they're really showing an enormous amount of strength. What you're doing, you're just back testing these support levels again. Just confidence of the fact that you are, you know, finding a base of support before marching on. The RSI looks healthy again. Look how healthy that looks mid-level. So what we're going to do now, okay, because you do look like you're forming some kind of descending kind of triangle there. If you look at that, okay, we're going through a very similar sort of scenario with chillers at the moment, where it's very drab, very boring, going sideways, not much happening, okay, very similar. It went up like this, formed a bit of a ball pennant, went up and hit its head on a level of resistance and falling back down on support. So, you know, Chiliz is doing exactly the same, and Chiliz is in a bear trend on the 4-hourly time frame there, because it's under the EMAs, and it's looking to bring down a little bit of a repel on the EMAs as well, just there, like this red line coming down like this, okay. And if you was to get that sort of suppression there where it's continually coming down, that's called an EMA repel, okay, and it's just adding more pressure to the downside. So if you was to come down, right, not financial advice, but if you was to come down and fall any lower, because you can see you're breaking down out of this ascending triangle right now, you look like you've lost this kind of level of base of support. Do you see this? Okay, you sort of lost that a little bit, okay, because you sort of fell out of this already, and you're sort of underneath it, and you're also under the EMAs. Do you see that? So you need this candle. Keep an eye on this candle here. Currently 9 o'clock, so that closes, it tells you on the right there, closes in 1 hour and 30, okay. If that doesn't get above this EMA, then you are looking at that added pressure pushing you down, okay. You may see a little bit of a bounce there at 0.15, okay, cents. You may see that, because I do work in dollars, by the way. I get a lot of questions, you know, what you working in. It's dollars, because it's basically everything's pegged to the dollar, USDT. It's just easier to work in. So yeah, it's 15 cents, okay, and that sits on the 0.382. You might see a level of support just there, but what you potentially might see, and what would be healthy, okay, it would look bad, but it would be relatively healthy, because you would be forming that W double bottom that we've got going on, you know, and that's your resistance line of that W bottom, because at the minute you have been caught in this sort of descending triangle. See this like that, okay, which usually is a continuation pattern, okay. When you come up into it, you do have a target breakout of that, and I will give you the target breakout right now. Let's just get rid of that resistance line of a W bottom there. So what we've got here, So when you come up into these descending triangles, they sort of look bad, they break down, okay, but they're always a continuation pattern, really, 9 times out of 10, and you do have a target out of these, and the target is something like that, okay. So if you was to see a bit of buying pressure coming for one right now and get you back in, because this is not closed yet, okay, this is not closed, it's not lost support of this base yet, of this descending triangle that you found yourself in. You've had multiple touches along there of support, you see that? But now you're starting to fall out, okay. So if you do fall out and you fall down, we'll target that in a moment. But if you do break back up and you break back into it and you get above this resistance line now, okay, if you do get above, you're looking at a little bit of a mini pump there for one up to the 0618, okay, and then take that back on. But what I am anticipating here is a potential breakdown. And look, your breakdown is always a length, whether it's up or down, and what that might do, you might actually see that breakdown, okay, which would bring you down to make this higher low, and this would be a fantastic area to put bids in to go long on one. Not financial advice, but this is a particular trade that I am actually targeting personally, okay, because I think that this will be a fantastic opportunity. I'm actually going to set some bid orders just 1% up above that, so whatever 0236 is. Sorry, that's the Fibonacci mark there. The actual 0.13761 plus 1%. I will set some bids in at that level, okay, and and go long. And I think that would hold really well as support. And in that as well, that would give confirmation that you are making that double bottom here that we are targeting. We've been targeting a very long time now, okay. So again, like that, higher low, come down, low, come back up, hit your head, fall back through, make a higher low, double bottom. Do you see that? Lovely double bottom like that. And then with that, you'll have a resistance line on the way back up. If it does happen, it might not happen. I'm just showing you potential of what can happen, okay, in the charts here. So if it does come back up, you've got this resistance line, okay, where the center, where the neckline of a W is, okay, and that's a massive pump, in my opinion, for one, which would absolutely propel it back up through the golden ratio, through the 786, because that's your target, okay. Your target is from the neckline, which acts as resistance off a double bottom, to the close of the candle there, and you push up and look, it will take you right bang on to the 0786, which is at 19 cents. So do keep an eye on that. If we do start to break down, it looks bad, it looks awful, okay, but all you're doing is forming a lower high, okay, and it is actually relatively healthy. Once you start falling out of this particular level here, if you want to start losing that, okay, then you would be looking to retest this level here. And if you do start losing that low there, making a lower low, you're looking at a larger rollover correction here for one. So it's something to keep an eye on about. And you know, if you are holding on to one at that point, then you know you have got to think about your exit strategy and taking some profits if you've not took profits already. So just zooming out on the daily time frame there. So if you look on the daily, you are above the 20 EMA on the daily, which is really positive. Okay, it is really positive. So you can see you're caught on the daily, and as this yellow line keeps moving up, okay, and if you keep back testing it as support and not falling through it, it's pushing you up, it's creeping you up into test these high Fibonacci retracement levels, and that's basically how it works, okay. Just like down here when you fell through there, we've already targeted that, okay. We'll get rid of that now so you can see it a bit better, and you've got that double bottom there. As you sort of fall on these levels, because you could have dropped your fib on there and we would go through all that, but the video would get really long. As you fall through, okay, and you get back up, just like you got back up there, if you're constantly back testing this as support, okay, on a daily time frame, you get them nice little touches, you're just going to march on. It's refueling the rocket ships. I know it looks bad at the minute, you're breaking down, but you're actually holding support really well, okay. And like I said to you, if you was to come down there, I think that would be a fantastic opportunity for one, okay. Just looking back on a 4-hourly time frame here, personally, I think that would be an amazing opportunity for one. And again, you know, if it was to break up now and start marching on, then I would absolutely be going long as well, and you will be looking at a V-shaped recovery and getting through these levels of resistance. But right now, if Harmony 1 did go down to here, okay, went down to here, you could open a long position up, right? And if it started to go up and broke through that and got up to that particular target that we're targeting, you're looking at a 40% trade there for one. Not financial advice, but that's just the things that we look at in the channel, okay? And I'll always keep you updated with what I say. I will never feed you any spiel. the charts tell a story. So that's basically it. I'm going to cut that short today, even though it was 10 minutes long. I don't know where the time goes when I'm making these videos. Honestly, I don't know where the time goes. I start them and think, well, I'm going to be quicker, and then it's always about 10 minutes long. And I'm like, what have I been talking about? I hope I'm not boring you all, and I hope that you find it a level of education and entertaining. And once again, really appreciate all the really nice comments. I get some amazing comments on this channel, and it's just great to see that it's helping people out. It's giving them a level of reassurance, and in this crazy crypto world that we find ourselves in. Take care, everybody. Have a good weekend, and I'll catch you soon. Bye bye.